Hey, what's going on, folks? This is Dimitri back again. How are you today? Hope everybody is all right. In this video, we're gonna make our ways and see what's going on in the market again, see what's happening, because there are some real crazy movements today. The reason to it is the market is trying to get back, and it's not happening for some reasons. Some of it due to the increased rates, and some of it just in general practice. So thank you guys for coming in. If you're new to the channel, like and subscribe down below. Thank you for guys being here. My name is Dimitri, and in this channel we are just generally going through encouragements, financial, personal education, personal finance, and real estate. So all the good stuff, you know. So let's get started and see what's going on. So to begin, we're gonna jump into a Dow Jones situation and see what the index says. And today I'm gonna post it right here. So in this morning, so there was a real pre-market jump of 200 points or sort of like that in terms of movements back and bullish market. Is it good so or not? So look at yourself in terms of why is it bad or good, because as we can see on the general practice right there, it's a very volatile, going up and down, up and down, up and down. So with the saying that the companies are generally want to go up, and as just in general practice, if you go and do a very basic financial analysis and see what's going on with the companies in general, they have real good profits, good numbers, good income, revenue streams, and things of that nature. Not on the everybody case, but in majority of the big guns, so to speak. And that kind of, it's encouraging. However, the reason they don't jump up is because of I think is because of the rates. Because when the rates were increased and people were starting to experience less or more expensive money, so to speak, in their pockets, or to get to their pockets, that's where we encountered that situation with financial market. So what is it all saying to us? So well, it's definitely we can see that the volatility of the market is due to the higher rates. Well, some of them, like we can conclude from the what's happened, or what has happened in a little bit of the past that we had, and volatility is becoming there. The reason is, well, like we know, the inflation is people trying to stop the inflation, which is good, you know, in terms of not to be crazy enough to raising prices because it's not sufficient for people, but again, to bring it down to a place where it usually in a good spot, where it's sort of around 2-3%, or so to speak, like that. So basically, I think that's the idea that the markets and the Fed has in terms of how money flows and what they're expecting on the inflation side of the coin. So but other than that, it's pretty much gonna be an easy day. I think it's gonna be all right. So it's middle of the week, and there's gonna be a lot of still going on and kind of happened towards what's gonna happen in the future of the market. The whole total aspect I wouldn't be so worried about, because as of right now it's more or less stabilizing, or gets stabilized, because it's less and less volatile in terms of big drops or big changes in terms of how the market reacts to the changes of the changes that has been done by the Federal Reserve. So personally, I don't see the huge drops happening. So it will be back and forth in terms of maybe, like, I don't know, 100 points or something like that. But that's my very crude estimation, again, on the basis of what the market is doing. So Would you guys, if there's any actions that we need to take right now, I believe we can continue to invest what we want to invest, right? So today is gonna be like a jump day or not. It depends on the market what they're doing, but overall I'm not sure, like I don't see the drops even like more than they have been. And as you can see on the graph, actually I'm gonna post it one more time here, and the thing I wanted to point out to you guys is that as you look at the chart right now, there was a huge drop in terms of money, or like the droppage of the price for that specific, the Dow Jones that we're talking about. And remember what happened at that point of time. I remember that the federal, not Federal Reserve, but the presidential administration, I don't think it was Trump, I think it's an administration, they provided the paychecks to everybody as a sort of additional income or additional help for people in terms of financials and things of that nature, in terms of financials. So that's where they helped it. And then but now now that we are back to normal, or sort of normal, so and we're going to work and everything like that, see what happens is in terms of how much market has dropped again. Because I can see, like, it's just for me, like I noticed that thing, that it's been a sort of rebound in terms of how companies and how market has been doing. So in meaning that those money that has been issued to people, they sort of been bounced back in terms of the market and how the market sees that. It's just the thing because of that, and the reason I'm gonna point out in the chat here is that it bounces. It was going very well, and then COVID happened and it bounced down, and then it bounced. And at that point of time, Trump administration made paychecks and the checks to everybody, so it bounced very much quickly back again. And then as it was going, so as COVID stopped, right, and then the inflation started to happen basically, that's why Federal Reserve started, like, looked at it and said, okay, we're gonna bounce it back. Well, sort of, we're gonna put the increase in rate, and then it's gonna be obviously bounced back. However, look at the chart right now, because they did not increase rates so high, because it would be dropped very much dramatically. And I think that was due to their obvious calculations or whatnot that they have there, mathematics or whatnot. But notice that the difference here and difference here in the future as we speak. So right here on the chat, I will post it here. That is actually interesting, and I believe that might be also a constitution, and my logic behind it is that it's going to be a constitution on why it's going to be that it's going to be sort of a bottom of that inflation. That's that's what I believe. It looks like logical to me. So nonetheless, I hope you guys enjoyed this video. So that's gonna be it for me for today, and we're gonna be continuing our discussions in the future. So like and subscribe down below. I hope you guys liked that video in terms of what's going on in the market. Am I gonna be investing today? Yeah, well, depends. There are a couple things that are doing projects at the moment. However, if there would be no projects for me specifically, I think I would start bringing back the money into the market, because I took it out when that inflation and recession happened, and then I'm returning it back, because I feel that this is gonna be a stop there, because it's already been a couple of weeks since then. I think a week or so. And it's gonna be, in a nutshell, it's gonna be returning, and then returning more mildly and slowly at this time. So yeah, hope you guys enjoyed this video. Like and subscribe down below. My name is Dmitry, and we are a helpful community, helping out each other with their encouragements, personal finance education, and what's going on with finance, real estate, from the godly point of view. So see you guys next time. Dimitri is out. Ciao.